Hello, traders on the go. Scott Morris here. I want to do a little tutorial on how to set up your chart. So once you are in TradingView, and what you're looking at right now is TradingView. It is an industry gold standard trading platform, and the indicator, Trader on the Go, is built directly on TradingView. All right. So what's going to happen is once you have decided that you want to test it, you are going to go to TradingView if you don't already have an account, and you're going to get the basic account. The basic is about $18 a month. So as a friend of mine likes to say, Michael, if you're going to mine gold, you got to have picks and shovels, and picks and shovels, that's where the money is usually, right? So you got to have your picks and shovels. Your picks and shovels are TradingView, right? And the indicator. So you'll go to TradingView and you'll sign up. I think, like I said, it's $18. All right. If you decide to get an additional data feed, that's like $7. Okay. Now I'm trading the NQ, the MNQ, and for that I needed to have the additional data feed, which was $7 a month. All right. You may or may not need that. You can trade pretty much any instrument using Trader on the Go. You can trade gold. You can trade NQ, YM, futures. Pretty much anything you want to trade, you can trade with this indicator. Now, in order to download, right, your indicator, you're going to go to indicators, and then you're going to go down here. When you see this pop up, you're going to go down here to invite only. Click on invite only, and you're going to get these selections. Whatever selection, you're probably only going to have Trader on the Go. Okay, these are just other test programs that I'm running. But Trader on the Go, you're going to see that there. You're going to click one time on that, and it is going to load your indicator. Now so that nobody gets weird, I'm going to get rid of that indicator because that's not part of it. So now we have a nice clean chart with Trader on the Go. And here is a really good example, actually, of one of the things that we're going to talk about. So we only take trades where, actually this is a better example. Let me spread that apart. We're going to take buy trades or long trades that happen above the blue line. The blue line is just a simple moving average, 200 moving average. Okay. So you are going to get this signal, and this signal can flash on and off as this bar is developing. All right. So allow this bar to close, give you a solid buy signal, and then you will enter on this bar. Now, there are a number of ways you can trade this, and it's strictly up to your risk tolerance and your style of trading. But when I'm trading minis, I like to get in on the next bar and get out on the same 1 minute bar. Okay. Now, what you can do is if you get some momentum here, you can maybe move your stop into position so that you can then trail your stop and get a bigger portion of this move. That's up to you. Okay, our friend John, he does that, and he just trails his stop up to get the most he can get. What I have found for myself is, because we get the signals on our phone, and this whole thing was designed for traders on the go so that you can take trades wherever you are, anytime, on your phone, it makes trading so much more fun. And I have discovered or realized that the reason traders fail, especially amateur retail traders, is because they're not professionals, they have busy lives, they're doing other things. And even though we think that we fail at trading because we don't know enough about it, or we're not good traders, we don't have enough experience, it actually comes down to this one thing. You have failed at trading because you don't have the patience to sit here and wait for the next setup. That's the reason 99% of traders fail. So what Trader on the Go does is it takes that out of the equation. So you can take a trade. Let's say you take this trade and you get out, let's say on the second or third or fourth bar, and you've made a profit. You've done this while you were on your way to work or picking up the kids from school on your phone. All right. Now you've done the trade. Now you put your phone down, and then you wait until your phone alerts you again. The next time would be over here. If you count these bars, each one is a minute. You're looking at probably, 20, 30 minutes. And then you get another alert for a sell. So you look at that and you go real quickly, boom. You can see it's a sell. It's above the blue line. You ignore it and you move on. And then look, about an hour later, you get this one. Now, this is the one we started talking about. Let me talk about this one. So if you get the buy, and the buy is below, but this next candle closes above, or I should say opens above the blue line, this is a trade that I would take. Now, you can remain 100% loyal to the rule, which is only if the buy is above the blue line. But I like this because it's penetrated the blue line, and then your next candle, your entry candle, is the next candle, right? The next bar. This is giving me momentum. And all of a sudden, instead of the blue line being resistance, it's now support. Okay, and you can see that price came down to that support multiple times and didn't penetrate back through it before it took off. All right, so that's another way to do it. Now we can scroll back on the chart. I think this was the example we used before. Here is an example of a short or a sell that came on this bar. The next bar that opened above the blue line. This is not a sell that I would have taken on the second bar. Okay, only if the second bar had opened below the blue line would I have considered it. And then there's another thing to consider too. When your blue line is flat as a pancake like this, it might not be a great time to trade. And again, I want to reiterate, the beautiful thing about Trader on the Go is you don't have to sit here scratching your ass waiting for the next trade when you know it's just going to ping you when the next good setup comes. So let's keep scrolling. Here's a buy is below, you ignore it. Here is a buy. Okay, let's look at this one here. This buy came, and it looks like I took this trade because there's a blue arrow. So this buy came, you got into it. There would be no reason to not get into it, except maybe your blue line isn't angled enough. So there's not much strength there. There's not much strength to indicate a trend. So you might incorporate that into your like absolute super duper best trades. I'm only going to take the best trades. That would mean that you would take trades that are above or below and that have an angle on the blue line that indicates a trend in one direction or another. This one right here, this buy right here, this was potentially a losing trade. However, if you had gotten in on the bar, on this bar here, it looks like, yeah, you can barely see that little arrow right there. That's where I got in. If this was a winning trade, you would have been in and out of it like in 2 seconds. Okay, so it was probably a losing trade. And you're going to have losers. Here's a sell. Below the line, boom. You get the, and I took this one. I think I took this one. Yeah, so you enter on this, you enter on the second bar, bada bing, bada boom, you make your money. This was a really nice trade. This was very close. I think it was the open. I can't remember. But you get the sell above, right? Way above the blue line. It pops down. That is momentum out the wazoo, right? So I entered on the next bar, as you can see, and closed out on the next bar, made a nice little profit there. Okay, and here, another good trade. And this one I actually took. You can see where I got in. So fired the signal on this bar. You enter on the next bar. You can see the red arrow here where I exited the trade on the third bar. So I'm literally in and out of these things within a minute or two. Here's another example, because I want you to see that. Let me make this as big as I can so you can see it. Perfectly flat market. This was either pre-market. I think it was actually yesterday evening. Let me see. No, it was today. No, I can't tell. Anyway, so I get my sell above and then the next bar. This is risky business right here, okay? You're really going sideways, as you can see. There's no trend at all. Sometimes I'm just screwing around, right? And this was paper trading. So I got in on this bar, I got out on that bar, I made a couple of bucks, all right? So I think that's pretty much all that you need to know, because trust me when I tell you, you don't need to know a whole lot. You don't need to know about trading. We designed this specifically for people who are amateur day traders, who are looking for a system that they can trade while they're moving around in the kitchen, cleaning house, taking the kids to school, working their job, going to the gym, doing their lifestyle, and still be able to pick up a few $100, few $1,000 a day. All right, that's what this thing was specifically designed for. So keep that in mind. Don't saddle yourself to a desk. Like I said, you will drive yourself crazy. And while you're waiting for the next trade to come, not only are you going to get bored and miss the next trade or force a trade, but you're going to be doing other things. You're going to be doing other things, and then you're going to miss a trade anyway. You're going to be pissed off, and that is no way to be. Trust me, we have been working. As a matter of fact, when Paul, who's the creator and my business partner in this, when he called me for the first time and told me, Scott, I finally created a system that we've been looking for years. Okay, so when he showed me that, bingo, it was all over with the crime. All right, so I hope this is helpful to you. Thank you very much for joining us, and I'll see you guys on the inside.